What's going on, traders? Welcome to it, Stock Market Movers. Are you guys excited to dive into another episode? We got another great week that we got to get into. There's a lot of earnings on the radar. There's a lot going on right now. We're going to touch some bigger topics today. Keep an eye out on some big movers. I actually will start using some of the moving tool, catch some of these massive moves that I'm seeing on out there from some of these cheaper names. Even Getty Holdings, one that I was looking at in live trading, getting the moving. We'll take a look at some of those topics today. ISM, manufacturing PMI, market sentiment, Russia, natural gas and oil, Pelosi visiting Taiwan, U.S. crackdown on NAND chips, Alibaba, Boeing, back to school, Celsius, Starbucks, Amazon, Target, Bumble, and we got another great interview. We got Carlos Legaspi, excited to get into that. Also going to play a video with Hyliion. I know they put this video out. They didn't tell me to do this, but I wanted to play this video. I'm going to show you guys the future of trucking. Give me a thumbs on up. Let's dive right into it. And like always, hit the thumbs on up. And welcome to Stock Market Movers with none other than Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
What's going on, traders? Yes, we're starting to dive on in, and we got another great show like always for you. We got a lot to talk about, a lot on the topics. We'll run through those. I will get into some economic data. Let's first dive really quickly and take a quick peek at the market, see what we're trading at, and by the end of the show, where are we trading at now? So it looks like we started getting a little tippy-toppy around the 413 range. You can see we tried to get up there multiple times, topped out around the 413. We got the high here of 413.36 and a high here of 413.41. So around there, we started topping on out. We'll see if this can kind of hold. But a lot of this coming, of course, off of what? Off of the short squeeze that got put on. Now, the real question I think everybody's asking is, now that we've seen this kind of lift, how long does the rally last? Will we be able to hold up here, up towards the 420, or will we come crashing right back down towards the 401s and closer towards the 390s is what we're all trying to pay attention to, see if we're going to get that drop or not. Of course, we need to pay attention to economic data, right? And today we did get some economic data. I'm going to take off the topics here, and so you guys can take a look here. And so it's important to keep watch to see what's going on in the data, right? We got data-dependent Fed. We need to keep watch what happens here. So economic data today, ISM manufacturing PMI coming in a little bit better than expected. Estimate was 52, prior was 53. The actual came in at 52.8. The monthly decline on the index, though, was the biggest fall since June 2010. Usually this moves a little bit slower than what it's moving now, but we need to just keep watch, right? Because a move below 50 on this would be very kind of detrimental. That would mean a contraction. So keep this on the watch. Of course, economic data will keep on our radar. And this Friday, big jobs report number that's going to be coming on out. All right, now let's keep going. Let's talk a little bit about what you guys can be seeing. And, you know, a lot of people are going to be wondering, how long does this rally really last? Are we going to come crashing right back down? I think you need to keep on watch what happens with inflation, right? I mean, there's a lot of talk that inflation has peaked. This is talk, though, to me, because it hasn't shown up in the data. There's too many people that have already made that assumption that inflation's peaked and it's, you know, coming around. But to tell you the truth, that's not what the Fed told us. That's not what PCE told us. That's not what I'm going to be calling out happens potentially. We could see a decline there in inflation, but does that mean that it's peaked? That's the question that we need to start asking ourselves. And a lot of this is going to be dependent on what happens in Russia with natural gas and oil. So the question I put out there today, and you guys can answer it, will we see a new 52-week high in natural gas? Let's take a look at some of those natural gas stocks. So one that I can clearly just point out to make this easy is UNG, right? Will we get back up there towards, let's say on UNG, towards a high of 32.77? So we're looking at a push back above this level. And so will we get back up there? I asked you guys in the chat. I think that we personally are going to get back up there. And I've been thinking about this since down here because of winter. We've been keep hearing more and more mentions here of cutting supply. Russia did state here over the weekend that Russia can do help, that they can't help with urgent repairs required to malfunctioning Nord Stream 1 gas pipeline. They said that they cut, of course, the supply and that its main pipeline is just at 20% capacity. But they said that the turbine sent to Canada for maintenance had not yet come back, and their other equipment also needed repairs. So pretty much saying that they can't do much, but they need to kind of work what they can do to have those repairs become more of an urgent matter. I think we need to keep on watch because we hear questions like we see today, right? This is natural gas, but Goldman coming in today and saying, hey, well, I just want to kind of state here that we see oil heading back towards 130. That's a little bit of an interesting outtake here. So that would be an interesting look there. If you're going to get oil to come back towards 130, then we need to keep on watch. This was from Goldman's Jeff Curry, and he believes that the fears of all-out demand slowdown are overblown. So we'll see what happens with these if they get that next lift. I've been keeping an eye out on some of these oil names. I think we could get a pullback followed by another rip. So I'm going to keep watch on these to see what happens in the energy trade. And if for any reason we do go back to, let's say, those 130s, what would happen to inflation then? Would we all of a sudden show, yes, we might have peaked a little bit, came down a little bit, but does inflation somewhat buy the dip in that mentality and it comes right back above those levels? That's what we definitely don't want to see, because that would show you that the Fed has been trying to raise rates into lowering inflation, and that their narrative, they weren't even able to accomplish that. Because if we get, let's say, one down reading, but then the next reading goes higher than the readings that we had prior, that would scare me out of this market. So we'll see what happens there with oil, and if we're able to go back towards 130, or do we find some price stability down here? I'll ask the chat. I did ask you guys a question. What did you guys think there? Do you guys feel that natural gas is heading back on up? Do you guys feel that oil is heading back towards 130? Let me know in the chat. All right, what's going on out there? DG, Constitution, Stellos, Blind Trading, Dustin, Charles. It's good to see you guys in the chat. Henry, the Blind. Hey, well, say hello if you're new to the stream. All right, let's continue going here. Now, a lot of what's going on today and a lot of the questions is should Pelosi's visit to Taiwan have investors on edge? And I think this is an important thing, because I think a lot of people are looking to see what happens with this situation. There's a lot of negative and back and forth right now coming out of China, right? We just saw that the president had a meeting with, of course, Biden, and then a lot of this came also with some warnings. If you actually paid attention, President Xi, he warned U.S. President Joe Biden that the Washington should abide by one China principle, and that those who play with fire would perish by it. And so that was the quote that he gave. Of course, this comes on the heels of Pelosi, who began an Asian trip on Monday and is scheduled to be in Taiwan Tuesday night and stay overnight. We'll see what happens there if we get mentioned of that, and how does the market react on that. We'll keep watch. Of course, this is definitely concern in the geopolitical issues that are going on right now, and we'll see what happens in China if they do some backlash because of this. I think this is something that we need to keep on watch. But it's not only in there, right? We're seeing also last week, we got a lot of mentions of the CHIPS Act. And with that being mentioned, I did read a report by Reuters this morning about U.S. potentially cracking down on NAND chips. What does this mean? Well, I think it's definitely important to keep on watch some of these names like Micron, right? So Micron's up today, and this could be, that manufacturing index coming in a little bit better than expected. But also, the United States is considering limiting shipments of American chip making equipment to memory chip makers in China. So trying to limit the memory chip makers in China and focus on the ones that are here in the United States, like Micron and Western Digital. We need to keep watch of these. So the crackdown, if approved, would involve borrowing the shipments to U.S. chip makers' equipment to factories in China that manufacture the advanced NAND chips. Of course, this would be the first U.S. bid through export controls to target Chinese production of memory chips. So keep this on your radar. It's nothing that's showing up right now, but if you hear more and more mentions of it, this could potentially bring up some of the ones that we feel will get the best investment here in the United States, like Micron Technologies. And of course, keep your eyes on another stock like Western Digital, right? What happens after that? So we'll keep this one on watch to see what happens with the memory chips and to see if we get an expansion of the topic. All right, so what did you talk about Alibaba? Nope, we're coming right up to it right now. I got you. So let's talk a little bit about what happened there. I'm going to actually do the Alibaba thing for the Alibaba topic first, and then we'll go to what was hot and what was not, since you want to go ahead and address it. So will Alibaba get delisted? I think it's really starting to become a concern. You see the stock down there towards 88. When this stock was just above 120s just a little while ago. And this just shows us how quickly things can change in China, right? We started getting some positive commentary to come out in early June, and it started looking better. Things were looking good. Then what happened? July came along, the first week happened, and boom, we started getting back to the negative catalyst in China. And Alibaba is getting questioned now. It could potentially be delisted. It definitely could. Alibaba fell over U.S. Securities Exchange Commission, adding the firm to the list of Chinese companies that could be delisted, according to a report by Reuters. The company also set to release earnings later this week, so that could swing this thing around, but it's something that you don't want to lose sight of. This company is reported to report those earnings on Thursday before the open. So I'll keep watch on Baba, but for right now, I think you got to be hands off on some of these China tech names. And with that being mentioned, you could probably see K-Web heading down also. So this is an area where it looked good for a little while and quickly the story changed. Another thing to kind of state with China is that their PMI also falling here to 49, and this was actually up at 50.2 in June, so showing us their contraction. So this is something that we don't want to see, especially coming out of China, as you're seeing here, their manufacturing purchasing managers index falling, and not a good sign there for China. All right, let's get out of that. Let's go into what was hot and what was not today. This is where we go ahead and look at the sectors, look at the industry, try to find the rotation, and look at what stocks were doing well today, relative strength, and what stocks had relative weakness. Let's go diving on in. All right, so we get out of K-Web here. Let's go ahead and do a new change from the open here. Consumer cyclical leading us up 1.26, and what was doing well here? Let's take a look here. So you see auto, truck, and dealerships actually leading us. So you're going to see some of the cheaper names here that are kind of mentioned. Vroom, Lots is up a decent amount today. Let's take a look at the high cap names, see if anything here was leading us. And you can see here, CarMax taking a nice lift, nice kind of bottoming action, getting through that 100, looking strong right now. PAG, Penske Automotive, nice little lift there. LAD getting a nice little lift. AutoNation getting some lift. So a lot of these stocks getting some good push. I wonder how Carvana is doing. Carvana, CVNA. Nice little day there for Carvana also. So keep these on watch. We'll see what happens there. Let's go towards defensives. What was doing well in defensive? Household and personal products not having a bad day there. You can see here Colgate making a nice little lift here on the weekly. You could take a look. That's a nice little push back here. We can keep this one on our radar. CL, nice little chart looking like it wants to get back up there to the 85. Where do we see weakness come out of this? Last week we saw Procter & Gamble pretty weak here, trying to make a comeback on the daily as it gapped down, trying to push back there towards the 147. We'll see if this is able to make its way back. Clorox also getting a bid today in defensive. So keep these ones on your radar. I also saw some discount stores moving on up. I talked about Ollie was one that I was looking for this morning for that nice little 50% retracement to come into play, get some lift. It doesn't look bad at all. Burlington getting off the floor there, off the 140. And you can see also BIG up about 5.1%. BJ up about 4%. One that I really like is this Dollar General move. This is really setting up for that next leg on up. We'll see if this can continue to run. And another one that got a raise today, we talked about it, Target. I'm actually going to talk about that a little bit further on why they feel this is moving on up. But stay tuned, guys. We got a lot to talk about. Technology up also. We wanted to take a look at some high capitalization. How are the leaders doing? Looks like we got NVIDIA still up about 1.1%. TSM is down about 2.5%. And if you take a look at Microsoft and Google, they're both down here retracing. We'll see what happens to the Qs and the SPY overall today. We are seeing some topping action. The question is, will we see that continued leak here, or will it hold up and come back on the day? All right, what was not hot today was energy. Energy pulling back significantly. You can see XOM pulling on back here after a good lift, though. You know, this is the main thing is if are we going to see a stair step up? I could see that happening. And so a pullback, let's say somewhere into the 92 range is what I'll be watching for on ExxonMobil to see if we can catch that bounce, get back up there. But definitely keep these on watch. They're pulling back significantly and could catch some bounce eventually. So we'll see what happens here around the 158 if we're able to catch that and come on back here. But it's something that I will keep on watch. I still think oil is going to get hot eventually. I think it's just going to play games here, and you got to be careful, of course, not to get caught. Now, one area that we were keeping an eye out was, of course, with some gas plays here. So keep those on your radar. We'll see what happens there. But it's interesting to keep on watch. Now, I'm going to keep on watch these names because I feel like there's going to be that next run. We just got to make sure that we catch it before it takes off too far. All right. What other area was down today? Basic materials down big here. In what area? In copper, turning right back around, aluminum turning back around, and coal getting weak also. So just be careful in names like that. You can see that they're not holding on up. Real estate turning around also. We're starting to see that crack there. Are we finally going to see a big crack on the ITB is what I've been looking at. Of course, this is the U.S. Home Construction Index, and we have not turned around on this thing at all. We'll see if we eventually crack this, get back to below the 60s, but this is still looking strong, ITB. All right, let's get out of what was hot and what was not. We're going to get into our first interview of the day, and it's not going to be an actual interview. What we're going to do, guys, is take a look at Hyliion. Of course, Hyliion is a stock that I have actually driven the truck, so I know exactly about the truck, and I know how much it means to the company, and it could change around a lot of the trucking industry. You guys can see Hyliion is catching some bounce down here, so keep this one on radar. Let's go and check out the future of trucking and how does the EV work for Hyliion. Let me know in the chat if you guys have ever seen the Hyliion truck. Smash the likes. Let's go. All right. And you're talking about Disney. I'll take a look at that one, Mansoor. After this, we'll go ahead and dive into Disney and Tesla. Yes, I'm still short on Tesla. I don't really want to talk about my position too much, bang my book, but fried chicken, you get that, baby. Get that fried chicken. All right, let's go ahead. I'm going to stop share here. Let me go ahead and try to share my screen one more time here. Give you guys the Hyliion video here. Boom. Let me put it full screen here, and let's get it rolling here. All right, check this out, guys. This is how does EV work. I think it's important to take a look at this. You're going to find out about the types of EV in the Class 8 space, how they work, and their differences. Check this out by Hyliion.
Hello, my name is Thomas Healy, and I'm the founder and CEO of Hyliion. And today, we're kicking off an educational video series to share a little bit more about how the commercial vehicle industry is shifting to electrification. Now, all of you have heard about how the passenger car is making this move, and many of you probably even drive electric vehicles. But the reality is, and we've seen that very few people know the ins and the outs of how the commercial vehicle industry is going to make this shift into electrification. And we get questions on a daily basis about how these vehicles work and what are some of the hurdles that fleets are facing, or what are the benefits that they're getting out of these trucks. And so that's why we're kicking off this series, to be able to share a little bit more color on how this industry is going to make this evolution. So to kick it off, we're going to start at the very high level on what types of electric vehicles are going to be available and how do these electric vehicles work and what's the differences between them. Some of you may already know this, but we feel like it's a really important place to start so you know kind of what fleets are faced with and what options are out there. But before we get into even the details of how an electric vehicle is working, the question we got to answer is, well, why are we making this shift? Why are fleets so eager to adopt electric trucks? And it's a very simple answer. It's climate change. We're looking to reduce GHG, or greenhouse gas emissions, that are coming out of these trucks. And so to put some numbers to it, or some stats to it, the number one sector that contributes to GHG emissions is the transportation sector. And within that, about a third of all of those emissions actually comes from the commercial vehicle space. So we're going after a huge contributor to GHG emissions, or climate change. Now, looking at this industry, we've been faced with kind of a one-size-fits-all solution, and that's been the diesel truck. Almost all of the vehicles on the road today are powered off of diesel fuel. And the reality is, as we look forward into electrification, it will not be a one-size-fits-all solution. We really see that there are going to be three different types of vehicles that fleets are going to be able to choose from. And those three are BEV plug-in, natural gas range extender, and hydrogen fuel cell range extender vehicles. And so we'll spend a little time now breaking down the differences between those three vehicle architectures. So first, starting with the BEV plug-in, and this is probably the vehicle that all of you are probably most familiar with. And the way this vehicle works is it's got e-axles on the rear of the truck, it has a battery pack on the side frame rail, and then it plugs into the grid in order to recharge that battery pack. Now, there's pros and cons with this type of vehicle architecture. One of the big hurdles is you need a very large battery. And the longer range you want out of that truck, the larger battery you need. And thus it adds more weight and more cost to that vehicle. The other downside you have is you need charging infrastructure to be able to leverage the grid in order to recharge that truck. You need very large chargers. And today those chargers are not the same as what's used in passenger cars. So it's a new charging infrastructure that needs to be built out. So when you look at these range extender vehicles, they have very similar architectures to BEV vehicles, but you actually have a power plant on board the truck. So let's first start with the natural gas range extender vehicle. It has e-axles just like a BEV. It has a battery pack, but now you have an onboard power plant that will actually produce electricity as you're driving down the road in order to charge the batteries. So what this causes is you don't need as large of a battery pack on board the vehicle because you're not trying to store your entire amount of energy for the day. Instead, you're trying to just have enough energy there in the battery pack to act as a buffer in between the generator and those e-axles. This is a very similar setup to where what we see in the hydrogen fuel cell vehicle. It's just like that natural gas range extender. It has the e-axles on the rear of the truck. It has that small battery pack. But as opposed to having a natural gas engine under the hood, you now have a hydrogen fuel cell engine, as well as hydrogen storage tanks on the back of cab. in order to be able to produce that electricity. So these are really the three different vehicle architectures that the industry is looking at adopting. And you're probably looking at these images saying, okay, well, I see the differences between these, but at the end of the day, they're very similar. There are a lot of similarities between these architectures. The big difference comes, though, is where are you trying to adopt these vehicles and what's going to be practical for your application? So next, we're looking at, all right, well, how are fleets going to decide which vehicle is right for them? And what we see the difference is really what range are you trying to drive every day? So we see the magical number is kind of like 200 miles. So below 200 miles, we think BEV plug-in vehicles make a ton of sense. It's short haul, final mile, local delivery type applications where you go out and you drive 100 miles in the day, you come home at night, you plug into the grid, and the driver comes back the next morning, jumps in the truck, and repeats that delivery. That makes a ton of sense for BEV plug-in. After 200 miles, though, these trucks are going out, their drivers are sleeping in rest areas, they're driving upwards of 400, 500 miles a day if it's a single driver, even in some instances, upwards of 1,000 miles a day if it's team drivers inside the truck. And for this type of application, you really need a range extender vehicle just because of the sheer amount of miles you're putting on this truck and not wanting to down the vehicle in order to recharge it off of the grid. So then the question is, well, are fleets going to go with natural gas or are they going to go with hydrogen? And the way we see this playing out is natural gas is here and available and ready today versus hydrogen is more a fuel that we're hoping to move towards in the future. So with natural gas, stations are already built out. There's over 700 natural gas stations in North America already there for commercial vehicles. The cost of natural gas is significantly lower than diesel fuel. And with renewable natural gas, we actually have the ability to go net carbon negative or below zero from an emissions standpoint. With hydrogen, the stations haven't been built out yet, as well as there's a push to make green hydrogen or lower emissions hydrogen. And there's a big effort underway to actually be able to reduce the cost of hydrogen since today it's significantly more expensive than diesel fuel is. So because of those factors, the way we see it playing out is natural gas vehicles are the right solution for today. And then as the industry conquers some of those hurdles that I just mentioned with hydrogen, we'll start to see that industry move towards hydrogen fuel cell vehicles as well. And that's how we've laid out our business plan at Hyliion. We're bringing the Hypertruck ERX product to market. That's a natural gas range extender solution. And as you saw from those slides earlier, it's a very natural progression for us to replace that natural gas engine with a hydrogen fuel cell to then be able to offer our customers a hydrogen fuel cell vehicle as well when the time is right. So those are the three types of vehicles that we see fleets looking at adopting. And the big takeaway is we're moving away from this one-size-fits-all solution to various solutions that work for different applications as we go forward. But the end goal of all this is moving to lower emissions trucks that are going to be able to have a positive impact on climate change. Thank you, and we'll look forward to sharing more on our next video as we dive into the realities around commercial vehicle electrification.
Well, thank you, my man, Thomas Hyliion. So Thomas Hyliion coming in there and explaining there the different types of vehicles and how they approach the Class 8, right? What they can do, what they're looking forward to getting into. I think it's an important theme to definitely talk about. What's going to happen with that Class 8 trucking in the EV? You guys heard about the Tesla semi truck. You guys heard about Nicola stepping in here. I saw in the chat talking about a Hyliion's hydrogen powered truck. It's something that we all need to keep on watch because let's just be honest. As we can keep developing, ESG will become more and more of an important issue. We'll keep watch what happens to these trucks. Do we need kind of that BEV kind of vehicle, or are we going to build up the infrastructure to first have natural gas pretty much readily available for these trucks and they can run off of a generator, eventually getting on over to hydrogen, which could potentially kind of replace the natural gas and be more beneficial to the environment. We'll see what happens. I mean, it's an important thing to keep on watch, but how does this develop is the important thing, and how quickly can Hyliion take advantage of the market's need here. I think it's an important thing to mention, something that I'll keep on watch. This is a video series, so we might try to get them on to talk a little bit about this video series and their earnings. We'll look back and reach out to Hyliion. It's definitely a company that I keep a close eye on. All right, let's get out of that. Let's get out of the future of trucking. Let's go towards will Boeing take off? We need to talk about Boeing catching flight here. All right, let's go back into it. Stopping my screen here, sharing my charts. Let's go towards Boeing here and see how it's performing on the intraday. And it's doing well, at least for right now. Let's take a look here. So Boeing, will it catch flight? Well, this is a lot coming off of what? You saw the FAA talk about how this is going to go ahead and bring them back. And what is going on with Boeing? Well, the FAA now has approved inspection protocol revisions that will allow the resumed deliveries of the 787 Dreamliner. So keep this on your radar as you're seeing Boeing get really strong lately. I mean, it's made a nice move from that 147 up there to the 170. This could be pulling back in the next couple of days, but for right now, this has been really strong getting on back there. Now that it's closed in this shadow zone, you can see it here. We were talking about this for a while. Would it get up into that shadow fill? And there you guys see it, complete fill now. Now I think it could pull back towards that 147. We'll see what happens in Boeing, but definitely getting some lift. Another thing to mention is there could be a strike if there isn't a proposed labor agreement met today. So just keep that one on your radar. Could flip around and something to keep on watch. All right, let's get out of Boeing. Let's get into taking a look at discretional spending and back to school season. So what do you guys feel the back to school season will bring? Do you guys feel that, the consumers are going to be buying just as much, or will there be this move to maybe go in towards like the Dollar Tree store or Dollar General to make some cheaper kind of bargain buys? Because that's probably what we've been seeing. Right now, if we take a look, credit card balances for the people ages 25 years and younger rose by 30% in the second quarter a year earlier. And TransUnion, one of the big three consumer credit ratings, estimates that credit card delinquency rates could rise to 8.4 in the first quarter of 2023. Let's take a look at some of these discount stores and see how they're performing today. This was Ollie, of course, that I was going to point out, and it's already kind of lifting. The reason I pointed out this one is that I talked about this one when it started lifting here, right? I was watching this. This was July 11th that we started keeping an eye out on here. And I was pointing out this time where we looked like we were going to go down and we quickly reversed back up. So now that we're seeing it up above this 50, it's been doing well. It moved about $20 there, back up there. And now we're seeing the pullback really hold around this 57, 56 level. I'm looking for this to come back up through 70. As you'll see, Ollie, what does it do? Is it try to get inventory for the cheap when these kind of bigger stores have too big of supplies and inventory? They sell it off for cheaper. And we saw Walmart, right? Walmart make its move right back up, even though it gapped down huge. Look at this gap that it filled, guys. I mean, this was a monster gap here from that early profit, and it's still going on up, back up there towards 132. So this just shows me that, yeah, maybe back to school won't be too bad for these retailers. Target is up today, and why is Target up? Let's talk a little bit about that. Well, Wells Fargo upgraded Target to overweight from equal weight, and something to keep on watch to see what happens in Target. They did say that they consider it a proven share gainer. So keep this one on your radar. We'll see if Target can get on back there. And of course, is the back to school kind of season discretionary spending? We'll see how it happens. And of course, keep it on watch. I personally don't do some back to school shopping, but hey, if you guys are doing some in the chat and you guys have been out on the stores, let me know what you guys are seeing. Our local Target was completely out of school supplies. Well, that's no good. Definitely going to keep on watch to see what happens there, because there's going to be a lot of talk that comes out of this. All right, let's get out of discretional spending. And will there be a good back to school season? Let's talk about Celsius. All right, so CELH, right? The energy drink getting a huge lift lately. This is continuing to drive on up there back towards 100. Of course, this is coming on the heels of an announcement with distribution with PepsiCo, and we need to keep this one on watch. Celsius, of course, is the energy drink. They consider it kind of more of a healthier energy drink. But U.S. revenues soared 217% to 123.5 million. Also, PepsiCo announced that it was a $550 million investment in the drink maker Celsius Holding as a part of a long-term distribution deal. And if you guys don't know, well, what did PepsiCo do a little while ago? Well, it dropped a couple of them. It dropped Bang, right? Bang energy drinks were being carried, and they stopped being carried. They're going to get actually off of their distribution deal, and they picked up Celsius. We'll see what happens on these energy drink stocks. I mean, I personally don't think it could keep going, but who knows? I mean, look at the drive that it's done already. This was before in 2020, before the pandemic, this was a $6 stock. Now it's trading at 100. It's a little bit wild out there, but I'll tell you one thing. The people that drink Celsius aren't turning around, and they've been calling this out for a while that this stock would get back up there. And they see it higher than that 100. And I know a lot of people have been watching this one and also following the story of Bang Energy Drink. So we'll see what happens there on Celsius. Nice little lift there with a deal with PepsiCo. All right, let's get out of that. Let's take a look at LI. LI not having a bad day there. Autos, you guys can watch LI up today a significant amount after, of course, their delivery numbers coming in for July. They delivered a 10,422 of ones in July 2022, up 21.3% year over year. Something to keep on watch. Also, NIO reporting that they're opening up their first factory in Hungary. And I think this is something to watch, as this is the first overseas plant of NIO in Europe. In September, they'll be opening it. So keep that on watch. We'll see how NIO performs in LI, but they are having a good day today. All right, getting out of that, let's take a look at Amazon. And why is Amazon? Because I did see mentions here. It's not looking too bad. It's holding up there recently. I mean, it has just done a drive up there to the 130s, trying to hold on to the 135 here. And what happened? Well, they're adding to same-day delivery focus. So on Monday, it said that it's adding a handful of retail brands to its same-day delivery offering. And what are some of these brands? So it's going to include same-day delivery for apparel brands like PacSun, Diesel, Superdry, as well as vitamin retailers like GNC in 10 cities across the U.S. So something to keep on watch, right? As Amazon gets online purchases to shoppers' doorsteps even faster. I don't know about you guys. Have any of you guys used the same day delivery method at Amazon? I actually just used it, and I use it multiple times here where I'm at now in North Carolina. It comes fast, man. I sometimes, it at least tells me, it gives me a window, right? It's giving me like a 5-hour window. But it's sometimes as soon as the next hour. Like, let's say if it was right now at 1:43, it would probably give me a delivery time for 3 p.m. That's insane. You know what I mean? We're talking closer than, let's say an hour and 15 minutes. It can be at my home, picked, put on a truck, and delivered. That's a little bit intense. Something to keep on watch, how Amazon keeps battling with also grocery delivery services like Dash. You got Instacart that's really been taking over. And that's how they're battling back, right? Is being able to also do the same day delivery from these apparel brands, as some of these companies like Instacart have already chose to team up with apparel brands and different retailers. So keep that one on your radar. We'll see how this affects Amazon. It's coming back right now. We'll see if they can keep pushing. All right, let's go to Bumble. BMBL. Let's go take a look there. It's coming down a significant amount after a downgrade from Jefferies to hold. And what are they stating? Well, they're stating a decline in paying subscribers going forward, I'm going to call this also a winter trade, as probably you're seeing the dating come to a close, right? The beginning of summer usually might bring a little bit more dating. You're getting out of the summer season, going into winter, less spending, a lot of consumers worrying about their pockets. So, hey, you could see possibly the dating app get hit harder. Let's take a look at the daily. Daily has been coming back here from the 20s. We'll see if it gets back there towards the 30s. Nothing that I'm probably going to be playing, but hey, just wanted to bring it to you guys. A downgrade from Jeffries to a hold, and a lot of this coming off of them expecting a decline in paying subscribers going forward. All right, guys, in just a few seconds, we're going to be getting into our interview with none other than Carlos Legaspi, President and CEO of Insight Securities. Let me know in the chat if you guys are excited. I'm ready to dive on in. First thing we're going to do is play a quick trailer, and we'll be right back with Carlos.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, let's go ahead. Let's do our second interview on the day. First, we've got into a Hyliion video. Let's go into Carlos Legaspi, President and CEO of Insight Securities. Welcome back, Carlos.
Hello, Mitch. How are you?
Excited to go ahead and dive on in. Let's first talk about the overall market. What have you been seeing? How do you feel overall market sentiment, especially after a recent rally that we've had? Are we in the bullish camp or bearish camp from here? How are you feeling, Carlos?
Depends which side of the brain you ask me. My investor side of the brain, it's bullish. My trader side of the brain, it's a little cautious. We've had a really quick rebound, and like we talked last time, you had me that bear market rallies are the most vicious if you're short. And that's what we had. We've had a big recovery from the lows. I still think the rally has a little bit of gas. There's something we call the 50% retracement. If you go from where were the highs in November or in January, the lows that we touched, and you cut them in half, and that's normally where a bounce back runs out of gas. And so we're getting close to that in the NASDAQ and the S&P. So that's why I'm a little cautious as a trader. However, as an investor, if my time horizon is longer, there were some really encouraging signs. First, we've removed a lot of uncertainty from the market, just with the policy position from the Fed. It's the market wanted a more aggressive Fed so that regain the confidence that inflation will be reined in. And it was rewarded with a rebound in the market. Now going forward, I still have the same sectors I liked before: the energies, the financials. I still like those sectors, and I hope that I was saying, when everything's down, take the garbage out, take the pain, and replace it with quality. I think the quality will continue to outperform some of the more speculative names, because right now we're in the process of trying to get some visibility what's on the other side, let's say 24 months out. And if you don't have history to go on in earnings, that's the market's not going to reward you. However, if you have had steady earnings, those are the first sectors that are going to be emerging from this bear market.
No, perfect. One thing that I have been seeing is kind of the dollar starting to pull back a little bit from its recent run. How do you feel about the dollar overall, and how will this affect the markets?
Well, that's the other thing, is that so we had an amazing dollar strength, and it's somewhat akin to what we had in 2008. In 2008, everybody needed liquidity from wherever they could get it to pay down dollar debt. and that's why they would sell other currencies and buy dollars, and the dollar got really strong. So similar to here in this, as liquidity was being sucked from the system, people started selling other holdings to bring it to dollars, and we punctured parity with the euro briefly, and now we're at 102 for the euro, which that's as well the fact that it went so strong, that was a sign of a non-healthy market. So as the euro starts to strengthen a little bit, the dollar weakening a little bit, that's also a return to normal. And it's unless the people inside the corporations that are multinational are magicians in hedging, normally a strong dollar is a headwind in earnings. So the weaker dollar should also give some relief to earnings going forward.
Now, we just recently got another FOMC meeting, and for a long time, everyone felt like the Fed was just pretty much handcuffed, that they had no option but to increase the interest rates. Now, how do you see the Fed's position for the end of the year? Do you see a slowdown of pace in the interest rates?
I think now that they won like 2 consecutive 75 basis points, I think they're going to sit back and wait a little bit and see how it trickles. There's been some indications in the commodities markets and in the long end of the curve that inflation expectations are moderating. And right now, at 225 at the low range of the Fed target, that's above the target inflation rate. That's the other things that we talked about last time, that you cannot say I want an inflation of 2% and have a Fed rate less than 2%. Now we're there. So I think he's going to give it a little bit of time to settle, what they call data dependent. But they also have another tool that I think they might use. If you see the shape of the yield curve, it's steep in the front end, between the 2 and 10 years, and then goes inverted for a little bit and then goes steep again. That kind of Z shape on the curve, that's very unusual. And so for me, I think that if they wanted to, again, unwind their balance sheet, which is the other part of their policy, they're probably going to be selling some of those 10-year treasuries, and just to kind of repop that part of the curve and make it smooth on a positive slope. So given that still portions of the curve are still positive, that means that there's not a full consensus that the recession is inevitable. There's still odds that we could avoid it, or it's going to be, even if it's a recession, it's very mild on a recession.
Yeah, and I feel like that is 100% true there. We don't have no certainty of recession here in the United States, but it seems like Europe, it seems a little bit more certain. I don't know how you feel about that. I'd like to ask you that on Carlos. How do you feel about Europe in their recession? And then also, how do you see energy developing?
Yeah. Well, Europe has additional headwinds. You have from the energy situation. That's a big headwind. Their dependence on Russian gas and oil, which is being restricted. That shaves growth, especially in Germany and the manufacturing centers in Europe. And additionally, structurally, Europe is not as nimble as the U.S. So that's why sometimes emerging or adapting takes longer. The labor markets are not as the hiring and the firing doesn't take place as quickly. So it's normally going to be a drag on their growth. So I'm cautious with Europe until we have more certainty on the geopolitical front.
Now, last question I give you is, was there any earnings report maybe last week that really surprised you, or maybe earnings overall that surprised you?
I had to laugh on about Amazon, because I've always wondered, if how much they let us know. Sometimes they go say, okay, well, let's gonna pretend and go play possum and say they were gonna lose money or not growth, and then suddenly the next quarter said like they're gonna turn the dial and boom, their earnings, and we saw that big jump in it, and so the value of good management in a corporate is it's a premium right now. So when investing, invest in good management teams. Right now in this choppy environment, you need a good captain, and you see the divergence in performance between some corporates that just really fell out of bed and some other ones that are rallying up, and in the same environment. It's just because you had good operators and bad operators.
Well, I can tell you that very rare times I do this, but sometimes I will either buy a CEO or just buy a board just because they just kick it out the water consistently. And when you have consistency from a board or maybe a CEO, that's something that we want to keep a watch, right? Because if they can just keep kicking it out the water, as we know, even in a tough environment.
And then there are environments in which that good management, are you willing to pay more for it?
Yeah, that's for sure. And I think in an environment when we're worried about the bottom line cash flows, I think then we're going to have to pay attention to this. Thank you for coming on. Like always, Carlos Legaspi, President and CEO of Insight Securities. We'll definitely have you back on, Carlos, and see what happens in the next couple of months. It's going to be interesting.
Absolutely. Thanks, Mitch. Have a good one.
Of course. Have a good one, Carlos. All right, that's going to do it for our interviews today, but we still got a little bit to touch. Let's go into, if you guys have a stock, go ahead and throw it on out there. I want to take a look at Disney. I did see you guys mention that in the chat. So let's take a look how Disney's performing. It got back above the 100. I think it needs to just hold 100 for the week. If you could close back above the 100 here, you could pull back right to it. So just be careful on that end. I think if you pull back to it, and as long as you don't get back, let's say towards 96, you're still looking good. Looking at a little bit of some bottoming action in Disney. Take a look at the weekly RSI. There's not many times that you've gotten down here towards, let's say, 13 on Disney before. And if you take a look every time that you've gotten down there, you do want to see that if you've gotten a bounce, right? Like you could see here in the pandemic, of course, we went down here and we bounced, right? Let's go back towards another time where it went and did this. So right here in 2016, it went down to that extreme and then came all the way back on up there. So this is what I want to be finding. When are the extremes on the RSI? So I'm going to go out on a limb here and say that Disney is, for me at least, it's starting to be a buy here. And so it's a matter of now where the entry is the best for you. You determine that, guys. But at least in my eyes, I'm going to keep watching Disney. And at least I feel like it's starting to get more into the buy than the sell here. And it's a manageable position. You're seeing the extremes on the RSI come into play. So we could see it bounce on back. What's up out there, guys? If you guys got a ticker you guys want me to check on out before I get on out of here, I'll take a look at one more. And in a few minutes, we're going to be getting into none other than the unboxing of the rare V Friends. Don't want you guys to miss that. Guys, come and check out this video. I really want you guys to go ahead and check it on out. I'll show you guys exactly what it's going to be about right here. Just give me one quick second. So this is going to be about unboxing some rare cards with my man Chris Ketchy and the Roadmap team. Don't miss this, guys. It's going to be definitely fun. Coming on up next, you guys don't got to go anywhere. Check out some unboxing action by Chris's kids even. You're getting some YouTube love there. So I want you guys to give them some love. Definitely do me the favor. Just head on over there. Give them a like. Give them some love. Even if you don't stay for all the video, just do me the favor and at least come on over and see how the unboxing goes. There's some rare cards maybe that they got out of that. Of course, this is coming from the V Friends collection. All right. I did see mentions in the chat for some stocks. I got you guys. Let's go through those right quick. All right. So we got about 2 minutes left for that. So I'm going to quickly go through it here. ERX. So you're looking at the Energy Bull. Energy Bull, of course, this would be something that we would probably trade on the intraday. So for me, intraday today is a no touch, but tomorrow it could very much be a touch. You know, take a look at the daily, nice little push at filling in the gap, and then could come right back up through the 55. We'll see what happens there. Soxel, same thing, pulling on back here. The big thing with Soxel, though, is you got to just continue watching the overall market. If we're going to crack up here, you got to be careful because you could see a big decline come in. SPY overall coming down there towards the 409 and really just continuing the leak since we started the show. We started the show up here at 1 p.m. just leaking on down. We'll see what happens. Still a short Tesla, so I wanted to take a quick look. There we go, down there towards the 890s. I think I covered there. I just want to check that I got my cover out there, but this is where I was planning on holding into that Tesla. I'll take a look at my position after this. No, I had to stop towards the upside, but feeling good. Now, definitely don't miss it, guys. This is coming on next. My man, Chris Ketchy. Check him out as he goes ahead and unbox those V friends. It's going to be fun to check on out. See if he got anything really rare, anything valuable. We'll find out, right? Who doesn't want to find a nice card, and who doesn't remember opening up some trading card packages, whether that be Pokemon, Yu-Gi-Oh, I don't know, maybe you were into Black Magic, whatever it was, hey, let's go ahead. Let's check it on out. This is coming on next. Unboxing the rare cards. Hit the thumbs on up. I'll see you guys on over there. I myself am going to check it on out.